Hello traders, Nick Shaheen here, looking at September 6th recap, trying to put the spin on things as to what happened this week, at least from my perspective. Nothing here is an actual trade alert. I'm just sharing my opinion on what I'm seeing here in the charts and the markets. All right, so let's jump into it. Friday was mixed day, kind of a strange day for me. I was in and out of the office, and I left the office with a rally going after Jay Powell had spoken. First of all, we had the jobs report, didn't change anything. So it was a run rate of about 156,000 a month, which is about what we were expecting. It's pretty impressive if you believe the numbers. So that shouldn't have changed anything, and it didn't. And then Powell had a question and answer section where he wasn't very dovish, but I think he just didn't flat out say what scared people before, which was that this is a mid-cycle adjustment or something, meaning that he was still going to raise rates instead of cutting them. So, but he didn't sound like somebody who wants to cut a lot. If we get a cut in September, I'd be happy. If we do, we'll probably get a 25 point. If he gives 50, he'll say I'm done, and that'll freak people out. If he just does nothing, then the markets are in trouble. Not because we need it, just because of what they're, people are pricing in. It's all about expectation. Reality almost has nothing to do with it. Okay, what are we looking at here? Oh, before I forget, at the end, there'll be a little pop-up thing at the top left. Click it. You subscribe to YouTube channel. It's free, but this way you get notification of my videos. All right, this is the SPX. It's the index of the S&P. And we had been trading in a box. If you follow me and get my emails, I've been saying that in a while. And usually whenever the box edges break, whichever one, then you overshoot in that direction. Or at least it creates momentum in that direction. So I had two scenarios set up. And today, on Friday the 6th, we had, actually this whole week was positive. It was a good week. I'll show you in a second. Good day, VIX. The only clear loser on Friday was the fact that fear fell off a cliff. The VIX, the VXX, whichever you track. The VIX, I think, was down 7% on a mixed day where the small caps and NASDAQ were red, and the other index is just barely up, like the Dow, for example. So overkill, sigh of relief, but I'm not sure why. We still have so much going on, which leads me to next week. Next week, we do have a whole bunch of stuff going on, but I'm interested in some inflation reports, but most important, the ECB. It's Draghi's turn, I believe. They decide on rates. Well, they have negative rates already, but Draghi's got a black belt in Aikido, and there's no telling what he's going to do, and it's his farewell. I mean, he's on his way out. Lagarde comes in, Christine Lagarde, to take his position, and he might do something. And I think people expect him to do something. So whatever he does there, my point is that next week it's going to affect us a lot. How the dollar and our bonds. And you've seen this last dizzy was all because of bonds. And the bond prices were shooting through the roof. People can't have enough of them. So bond yields are falling off a cliff. Okay. So the biggest thing this week is that I don't think we covered the yield enough. The media freaked us out for the last 2-3 weeks over yields are falling, inversion of the yield curve. Guess what we're looking at here? The inversion of the yield curve. So when the yield curve inverted that one day right here, sometime in the pre-open, it fell and it didn't actually close throughout the day. It didn't close inverted until recently. But the world ended, according to CNBC. Well, this scandal happened this week. That's the opposite of the yield curve. This red line is the zero line. Anything below the red line is inverted. This is basically dividing the 10-year yield by the 2-year yield. It makes sense that the longer-term yield be higher than the shorter-term yield. When the opposite happens, when we fall below the red line, that means that the rates for shorter-term bonds are the yield is higher than the longer term. That doesn't make sense. If that's the case, if that happens throughout the whole yield curve of everything that banks lend on, then they'd lose money by lending money, so they won't lend money. So this happened today somehow. Nobody talks about it. It's like, I've got a big question mark on that. Okay, it reversed, but so this week was kind of strange. So let me see here. Back to the point that next week Draghi could put a wrench into things. or he could make things better. I don't know. I tried to think about it. I caused myself into a loop. I put myself into a loop. So if he does a lot of QE, like people want him to do, then the dollar should spike, because our money should be relatively stronger than their money. Because when you do QE, you trash your currency. So, and I'm going to assume he's going to have more negative rates. I have no idea how is that possible. But if so, then there'll be bid for bond in the US. So our yields will fall again. That means the TLT would rise, which is a shame because I'm short the TLT right now. Okay, so this is what I'm expecting next week. I'm interested to see what the heck he's going to say and what we're going to do about it as far as the markets. Meanwhile, this is the SPX and also the week. This is how the week ended. That's probably too small. Let's make it bigger. So this is the S&P. This is the all-time high, SPY, and this is where we're at. That's pretty darn close. Okay, this is the NASDAQ. The small caps are still lagging, and today they lagged. The Dow is right there. The financials are doing okay. You can't see the rest of it here. You know, let's do this. That's the bond market. It's been an insane run, and that's fear, well below where everybody thought it would be, given we have so much. And this is FANG. So that's the high in FANG, arguably. And this is where they are. Who's FANG? Is, you know, the big guys. Facebook, Amazon, Netflix. 2 tickers for Google. I would include Apple. I would include Microsoft. It wouldn't change much. It would still look the same. All right, back to the SPX. So we looked at the Friday, what the week looked like. I discussed what next week is looking like. What I'm looking at. And as far as trading, I didn't change anything this week. I mean, I learned nothing new this week except that people are freaking out over the same things over and over again. And they're not thinking about the one thing that matters most. What? P&Ls. How are these companies doing? They're doing great. They have great balance sheets. Just think of the top 6 in the NASDAQ are more than half of the NASDAQ itself. So Apple, Microsoft, Google, and Amazon is in there. I know I'm missing one. Facebook, hello. So they're doing great. And then the Department of Justice, the DOJ, is after all of them. Today, Facebook fell off a cliff. That's part of the trade. If I wasn't long Facebook, I would have gone long it today. It fell like 2 or 3%. From top to bottom, probably more than that. It was 192 overnight. It went down to 186 by the open. So it closed somewhere about 188. The same headline. The Department of Justice is after it. They're doing this and doing that. So what are we going to do? These companies are doing great. The macro, everybody's employed. Everybody that wants a job has a job. So where's the problem coming from? Okay, we're going to have a recession. That's a fact, 100% guaranteed. When is the complete question mark? So yes, I'm going to have an accident. I don't stay at home. I'm going to get a ticket in a lifetime. That doesn't mean I don't drive at all. If I ski, I'm going to fall. So I decide not to ski. So yeah, we're going to have a recession, but it's not imminent. The yield curve thing is not like a dinner bell. A, it didn't last. B, it's different because of what the Fed is intent on doing. They can maneuver things, LTROs, whatever the hell they're called, some sort of a trading long for shorts. A complicated way of saying they can make it so that the banks can borrow cheaper than they lend. There. I am confident. All right. So trading wise, I'm still short gold and silver, and I'll tell you why. So I'm going to be SLV, for example. All right. I've been saying that the silver trade, the longs are too comfortable. And I noted, I went online, I've posted it. I lost in my first attempt at shorting, but then I dug my heels and I was like, I believe this is going to fall apart, and it did. So payday right there. Same for GLD, okay? And it's still vulnerable to, I don't know, 138, 140. I mean, these are pivot points right there. This is open gap, kind of open. That one day, okay, so one day I said, when I shorted silver the first time, this happened. I said 1550 is my target. It came in an instant, but it lasted a blink. The same day, I posted it, I played it, I had money green, and then boom, flipped and never looked back. So I lost money on that trade, but I took my revenge. But same for gold. Same thing. That one tick satisfied the goal I wanted. Technically, it told me, you're an idiot. And then now I got payback on it. So I booked my profit in gold. I left runners, meaning I don't want to get blindsided again. But I'm still short gold. I'm short the TLT, but not with as much conviction, even though it's so extended. Look at this. So here's what I ideally want to see happen here. So if you're looking to short bonds, which is insanity because you've heard TINA, there is no alternative. That's an acronym, TINA. Well, TINA works for stocks even better. So TINA, the idea of there is no alternative, money abroad, if they want to buy fixed income, bonds, you know, the old adage, you buy stocks, you buy bonds, 60-40, whatever, because they're either or investments. Bonds are a sure thing. Well, guess what? Overseas, bond is a sure loss. Yeah, it's a sure thing, but it's a guaranteed loss because it pays negative rates. So you lend the government money, they'll give you less back, basically, which is insanity. So it costs you money to park your money in bonds. That's why there is no alternative for them but to come and buy the U.S. bonds. That's why the TLT prices go up. People want to buy them. They can't have enough of them. It's a, you know, it's a great looking pair of jeans that everybody wants. So you jack up the price on it. So, but the yields fall because when prices go up for the bonds, the yield fall. So there is no alternative to U.S. bonds except U.S. stocks because U.S. stocks are up 15% year to date. Bonds only yield in the U.S. 1.5 for 10 years. Under 2, maybe today it's over 2, just over 2, 2.02 on the 30 years. So you lend the government your money 30 years, they'll give you 2%, barely. Stocks are paying you 15 a year, basically, roughly speaking. Obviously, they're not as safe, but here's my plan. Okay, so I would like to see that fail tomorrow, but this is an open gap here, so they might rally into it. I'm going to stay in it and then hope they do this. Some sort of, I can't click today, I'm sorry, end of the week. So I want them to do this. Why? Because then I have the opportunity of seeing this. So keep track of the TLT. If you see it, do this and then fade, do this, whatever, and come back at some point here, 144-ish. It's a moving target, could be a little bit higher, and lose it. Then you have some sort of a head and shoulders, or it looks like a bat in this case. So what happens? If they lose the neckline, which is this one right here, the neckline, then they should technically fall this much from the neckline. So ideally somewhere around here. I haven't looked left yet. I'm going to look left to see if that matches up with any. Okay, so look at this move here. Spike down. So clearly the middle of this is going to be important in my opinion. And I do have a box here. I can't remember when I drew it. I do have a box here which kind of matches up with that neckline. And there's a big gap down here and a whole bunch of little gaps, I'm sure, somewhere down here. So I'm not saying the bonds are crashing because there is TINA supporting them. But I'm saying these people are weak hands and they're too comfortable being long bonds. That's my opinion. So usually when I see a rally this big, they do a half back test. So at some point they have to come back halfway to legitimize the footing. So it's entirely possible to see 140, 141 on the loss of 144. So if I don't want to anticipate the breakdown, I should wait for this to fail on a closing basis. This is a 2-hour chart. So on a 2-hour chart, but I could see it on other time frames. So the alternative would be that this run is actually insane and is getting more insane and going to 155. Okay, so I would chase both ends. It's getting busy here. A breach above this neckline or this neckline, I would chase it to like 155. All right, so this is my idea. So I would put a trigger. In fact, I'm going to do it right now. Add alert. I'm not going to write anything in it. But if it goes below this number, or maybe more comfortably so below this guy here, 143 and change. So how about 143.25? Where is that? right there. I'm going to leave it here. Should be 25. So that should be a trigger to, this is a late trigger, but it's better to be a little bit late than to anticipate it and have it flip. And I would chase it above that. So this was a lower time frame line that I had drawn. Okay, so there was a tight situation there, and it played out perfectly. So this is the same head and shoulders I was looking at. All right, this is the bonds. As far as trading, I didn't do much except I just shared. Facebook and AMD fell today hard. I would buy both if my thesis overall markets will be higher. What is that? IQ. This is the Netflix of China. I don't know what possessed me to look at that chart. I haven't looked at it in a long time. Maybe I've heard somebody talk about it. I like the setup. I like these two candles, whatever heck happened here around earnings, 3 candles. So they fought it out. This is where they're at right now, is the point of control, which means this is where they fight it out the hardest. So it should be support. So I didn't chase it up. I did sell risk down here in that red box. So that's called a bull put spread, credit put spread. I'm saying that it's not going to fall below 17, and if it is, it's going to bounce right back off it. But I could hedge it by saying it's not going to go above 1950 or 20, and I could sell the same risk up when 3 weeks out, so 2 to 3 weeks out. It all depends on time frame. This way, I don't need a rally to win, and I don't really. All I needed is to stay above 17. All right, so this is way more than I wanted to share, but I got going on a run, and I couldn't stop myself. So again, the small caps are lagging. This is the S&P. Let's go to the SPY, maybe less noisy. All right, and this is the S&P. And these, by the way, are headlines from China and then Trump. No, this is the Trump. I'm adding 10% on whatever starting September 1st. We bounced from it twice, and then this is where China on the Powell Day came out and said we're going to tax 75 billion on cars, and then Trump came out and said, oh my gosh, yeah, you're going to do that, I'm going to do even more. Whoop, back to. So we were inside the box just like the SPX, and we broke above the box, and look at that, I drew that line somewhere around here, and they came straight to it. So this is a resting spot visually. If I look left, this was a top. So it makes sense that they stall a little bit, and look at all these open gaps down here. So a little fade. By the way, I do have a hunch for next week. This is the IWM small caps that we could see 148 at some point, 148, 148.50, even for a brief touch. And I'm okay. That wouldn't change anything. If this falls and I'm long IWM, I'm long, but longer term. The 148 could come and go, but it might come. So, side note. Nick signing out. If you have any questions, let me know.